I view the space as a little bit like early internet.
Today I interview crypto gaming expert Yatsu,
And maybe we're kind of in the 2000, 2001 stage.
founder of Animoca Brands, a Hong Kong-based gaming software company,
Of sort of Web 1, but in the Web 3 equivalent.
and one of the most successful venture capitalist firms in crypto.
So how do you really sort of invest in that cycle?
To get advice from a billionaire, besides Ethereum, besides Solana, on how to find the most undervalued crypto games, what is the best blockchain for crypto gaming today, and which crypto gaming coins have the biggest growth potential.
But I would say the one that I think is a little bit of a dark horse, but I think has incredible potential.
What happens after the Bitcoin halving.
We're not done yet with spot ETFs.
And much more.
If you were starting over today at 22 years old and you had an extra $1,000 in your pocket, what are practical steps or practical things you would do to go from 1,000 to eventually 100,000?
Like the video if you appreciate these conversations, and let's start.
For the folks that don't know Animoca Brands, even though I would assume many do, what is it, and could you talk about that journey and growth?
Well, I guess the mission of Animoca Brands is to deliver true digital property rights for all. That's basically, our I guess, mantra. And I guess the way that we got there to do that, a lot of people know us for Web3 gaming. And that's really because, gamers, we believe, are the most natural onboarder from going from Web 2 to Web 3 because, I guess, traditional gamers do have an appreciation of, I guess, a kind of digital ownership, even though they don't. For instance, people who buy skins or have, virtual currency in their games, they don't believe they're renting them, right? They believe they own them, even though they don't. And so we think the transition of moving those type of users from this sort of, I guess, rental style of, I guess, gaming into a ownership style of gaming, which is Web3, is natural. Our thesis was really born back in the days of CryptoKitties. Our studio, Fuel Powered, actually had our hand in building CryptoKitties in 2017. And so we basically got a front row seat into that development. And what seemed a little bit more like a science experiment just blew up. And for those people who don't remember, it basically broke Ethereum. And there's some interesting parallels, by the way, because back in the day, all the Ethereum guys were like, oh my goodness, what is this? Who cares about breeding, kittens and cats online? This is a waste of space. We should not be doing this. And of course, today, NFTs, and in particular, so anything related to sort of cultural artifacts on the Ethereum blockchain, for instance, is a key part of its value driver and scaling solutions and the whole L2 narratives. And we're seeing the whole thing play out now with Bitcoin and ordinals as well. Exactly the same thing. It's like history repeating itself 5 years later. Anyway, sidebar. But so that's kind of the way that we saw we saw the light back in 2017. And we said, we think this is the future, digital ownership, and we can finally actually make it happen. But to build this future, we felt that the only way to do it was to really invest in all the companies that can help build it together. Right? Because, we're a small company back then. And to an extent, we still are in the bigger scheme of things. It's impossible to build, the entire Web3 ecosystem ourselves. So we started seeding and investing in many of these companies to help build it together with us in this collaborative manner. And that's when we sort of put early checks in like OpenSea, or even Magic Eden later on, or like, Axie Infinity or Sky Mavis as they're called, Required to Sandbox, Decentraland, all these, and of course, L1 and L2s, like Polygon, for instance, as well. So we sort of backed all of those guys to basically help build the ecosystem. And today we have over 450 portfolio companies, as well as our subsidiaries, basically that form, I guess, the family of Animoca Brands to help make true digital property rights reality for all.
So crypto gaming is here to stay, undeniable in my opinion, yet the industry or crypto in general it's grown since 2021, since 2017, et cetera. So how is your investors thesis updated since then, or what'd you learn from 2021 that you're taking into this cycle?
I guess, first of all, the investor thesis, broadly speaking, around sort of, Web3 adoption coming through gaming remains unchanged. But perhaps how that's adopted obviously has changed, because we made some assumptions, like many of us did in the industry, that in a kind of quasi sort of build it and they will come sense, right? Which is basically, hey, we're going to build a great Web3 game. The incentives are so wonderful. everyone's going to want to own their stuff. And by the way, there's this thing called play to earn back then, or now play to earn as it's called now. So there's all these incentives. And it did grow for a while, but then I think we saw some shortcomings in the model if we were just purely focused on these things. And I think the biggest issue that we found wasn't actually the fact that Web3 users wouldn't find these experiences valuable. It's that the Web2 user actually doesn't understand what ownership means and how they can benefit from this. And this was, I think, one of our key learnings, which is that in order to actually really create full-on adoption, we have to actually also inform people why Web3 matters. As in, we have to explain the meaning of property rights and how that defends our freedoms, in this case, online freedoms and online rights. And the consequence of that is because you have ownership, you can have capital formation, and you can basically have, create value from that. In the same way that, us as capital owners in the physical world, we derive value from that as well. And also our property rights in the physical world is the foundation of capitalism and the defense of basically a lot of our liberal freedoms that we enjoy. But this is something that is not straightforward to explain to people who don't understand this, because they kind of take it for granted. They grew up with this environment, so they think property rights are a given. And I think this is a contrast that we see in, for instance, the U.S. and in Asia. Whereas I would argue that the U.S. consequently, because they take it for granted, basically is not as capitalist as we think it is. Right? There's of course a lot of Americans who are very pro-capitalist, but there's a lot of Americans, particularly young ones, that have become anti-capitalists, and they are, it's become fashionable to talk about Karl Marx, for instance, right? Which is kind of insane in the U.S., right? But there you go. Whereas in Asia, from my parents' generation, we knew of a time when we didn't have anything, as in we had no property rights and we had no capitalism. I mean, for some people, it's maybe hard to imagine that both China and South Korea were amongst the poorest nations in the world. And today, basically, these are two of the wealthiest countries in the world. But it became wealthy because they had a respect for property rights and introduced capitalism into the economic system, which basically gave the foundation. And so even though the world obviously is inequitable and there's still a lot of room to grow to make it fairer, we certainly remember a time when things did not have property rights. And I think in the West, they take it for granted. And that's also one of the reasons why I think in the West, a lot of gamers don't like NFTs because they think of it as a kind of digital capitalism. The rejection of crypto broadly isn't a rejection of ownership. It's a rejection of money, and the rejection of money as in, it's from their perspective sort of created a great injustice in the physical world, right? In the sense that the rich get richer and the poor basically get poorer. And so they don't want to introduce that type of system in the digital world, which ostensibly has this quasi-meritocratic system of, when you play a game, supposedly you can get achievements just through skill. You don't have to pay your way into it, right? All the things you buy in games are cosmetic. But here's the irony. You can actually pay money to level you up. You can buy accounts. Like, people do this all the time already. There's an actual trade worth in the hundreds of millions, actually billions of dollars that does this. And so it's a natural thing that people want to do. It's just that I guess there are people who resist it because they fear that money will have the same effect in the digital world as it has in the physical world, which, by the way, I don't think so. I think Web3 will actually save capitalism because it's more fairer. But that's probably a different topic altogether. But yes, I think the adoption cycles are, and the thesis stays the same. I would add one more thing, which is we used to think, for instance, that it was very important that the Web3 gamer was someone who actively played the game. And we no longer think that. We basically feel that there are different categories of Web3 gamers. And there's a category of Web3 gamer that is a lot more passive. So by holding your token, or by holding your NFTs, or by holding your land, or whatever it is, they're actually just as much a gamer than the person who's actively playing. It's a different type of game. And they're still participants. They still are active. They're still talking to the community. They add value. They just don't add value in a sort of labor style way, which is kind of what we see in Web2 games. And I think this is the big thing about a Web3 game, a true Web3 game, basically introduces both a labor and a capital class. And the capital class is essentially the Web3 user. Whereas in the Web2 game, you only have labor. There's no capital class. The capital is owned by the company, so you never get to see it. So the billions of people that are playing Web2 games don't understand capitalism and don't understand that there's a capital class because it's the company. It's hidden to them. And basically in Web3, it's just opened up. And actually, I think it's more powerful because a Web3 user, basically who's your community member, also becomes kind of your stakeholder and your contributor, and in some ways, your equity holder of your project.
Very interesting. And yet I want to know, because Animoca has had great success in investments and the projects they choose. So because you see hundreds, if not thousands of projects put in front of you, as does my audience on a lesser scale, we just see the crypto market, crypto gaming, a new coin pops up every week. What criteria do you use to determine your investments?
Okay, so first of all, I mean, there's a classic criteria that I don't think need to mention about sort of the quality of founders and team and so on. So I'll skip that. I would say, we look for founders and teams that share in the same principles and values that we share. So, for instance, one of the key principles is that we believe that Web3 is about building in a shared network. But what does that mean? Well, it means that in a shared network, we can't seek a zero-sum outcome because it doesn't work. We don't believe it's possible to have a monopoly because you can have vampire attacks, right? I mean, just see what happened, with OpenSea versus Blur versus LooksRare, versus Magic Eden. And the reality is that, your customers are basically open to everyone. And, through airdrops or other campaigns, you can basically target, very, in a very, very sort of specific way, the kind of customer that you want to have engaged with your platform, whether it's competitive or not, for instance, right? So that means you have to build with a different perspective, and you have to build with a mindset where you're growing in a shared economy rather in one in which you try to monopolize it. In Web2, all the network effects are basically centralized. So they belong to Facebook, or they belong to Google, or they belong to Apple. And so these companies basically are worth trillions of dollars. But what they've managed to do was accrue network effects within themselves. And that, however, we think is a limit, despite the fact that they're worth trillions. But they also serve probably most of the world, right? I mean, it's billions of people that they serve. In contrast, in Web3, currently we really only serve millions of people, right? So it's not really that big yet in comparison. But the entire ecosystem is about $2.6, $2.7 trillion in size right now, right? And when you think about the launch of these tokens, the network effects represented, so we think tokens are proxies for network effects, right? Are basically, in some cases, billions of dollars, like Pixels, which is also one of our portfolios. I think it's 3 billion or 4 billion, it doesn't really matter, like in the sense that these are basically really, really big numbers represented in the value of their sort of tokens, for instance. And the founder that understands this basically is the one that we like to back, because they also understand that they have to collaborate with everyone, right? Because remember, in Web2, it's not about collaborating. It's about essentially quite the opposite, right? It's about essentially sort of sharp elbows and basically making sure that, they get ahead of the other at the expense of the other. But in Web3, whether it's through airdrops or campaigning or whatever, actually, it's much more about sort of how do I give a benefit to someone else in another network to basically come and join this network and give value back to them, for instance, right? So it's a different mindset. It's actually not that different from advertising and marketing, except that the value goes directly to the end user as opposed to the platform. But it's a different mindset, right? And so I think that's one big thing. And that also means that we need those founders to really appreciate and understand, the power of tokens. And by tokens, I don't mean just fungible tokens, because there's projects that might only have non-fungible tokens, just NFTs. But still, they're powerful because they embed with them many values that create network effects. In Web2, we really only have utility network effects. People don't normally talk about the financial network effects that give financial sort of, basically power. But in Web3, it's all connected. So the utility and the financial network are within the same framework because of blockchain, which means that a true Web3 game or Web3 anything without the financial system built into without taking advantage of the financial network effects, basically is not Web3. And so the Web2 to Web3 type of projects, often dubbed Web 2.5, that have failed, are actually the projects that don't take advantage of the Web3 financial network effects. They only focus on the utility of the sort of the core utility. And I think that's basically another thing. We look for founders who understand essentially the union of these two, because that's basically blockchain and Web3.
Besides Ethereum, besides Solana, What is the best blockchain for crypto gaming today?
Well, I think there's a lot of emerging ones, but if I had to say one that's right now, I would say it's probably Ronin. Ronin basically powers, it's pixels and X Infinity. I mean, that's definitely one that I would say is a key player. I mean, obviously the other ones, Polygon slash Immutable are there as well. For instance, we've been early backers of them as well. I mean, these are all chains that we're supportive of. But I would say the one that I think is a little bit of a dark horse, but I think has incredible potential, and of course we've been being big backers of it as well, I think is Ton. Right. And I think the reason why Ton's so interesting, I think last year it became public that we were the largest validator. And we also have projects like Gamey, for instance, that are now building on Ton, for instance, and doing something interesting there. Is that with Telegram, you have what 800 million users, and with a sort of the commercial interface basically empowered effectively through blockchain with Ton, with a really slick wallet integration. I think that could be an interesting path for mass adoption. And as I mentioned earlier, you don't really become a strong Web3 project without actually also addressing the native Web3 user, right? So you can't just say the Web3 user will turn into Web3. You have to basically also sort of utilize the network effects of existing Web3 users. And I would say a huge percentage of the Web3 community actually sits on Telegram. So it's already kind of there. Right. So I think there's some interesting parallels there. So that's another one that we're really excited about. But yes, today it's Ronin.
And on Ton, I think maybe you said this, but I just repeat it if you could. What are the specific, like, are there specific games today built on Ton, or is it too early?
No, I mean, for instance, Gamey is one that's basically building on Ton at the moment, but it hasn't launched yet on the game. It's live, so you can do just sort of add Gamey and call the bot. But the integration of the Ton blockchain isn't done yet, but that's basically part of the roadmap, which I think is going to be pretty exciting. But you see other early implementations, like with Notcoin, for instance. Obviously, that's a very simple thing, but that's something that's also utilizing Ton blockchain, and they've got some interesting NFT voucher systems there as well. So it's early days, but it's coming. And again, the one thing that Ton slash Telegram has is very strong distribution, and in some ways they're ideal for it, not just because of their native crypto communities, but also because the ethos of Telegram is already fairly decentralized, right, in comparison to other ecosystems out there, for instance. So it's not likely that WhatsApp, for instance, right, or Messenger is going to do anything of that sort, at least in the near term.
Is the Bitcoin ecosystem for gaming worth looking at?
Oh, absolutely, absolutely. So we think of L1 and L2s basically like nations, right? So in that sense, they all have their own culture, their own ecosystem. They cross over, of course, but in many ways, the native culture is very specific and unique. And you see this, by the way, not just with Bitcoin. You see this with Solana and Ethereum, and sort of and the newer ones that have come out, for instance, whether it's just like Say, or things like Aptos, or the Move language, or like this, all sorts of new L1, L2s come out that have their specific communities and sort of maybe consensus designs that attract a certain type of end user. And Bitcoin is no different. In fact, I would argue that Bitcoin is probably one of the most hardest sort of, hardcore community users out there. It also happens to be the biggest one, right, in terms of market cap value, for instance. So yes, it makes sense. And I think if there's anything to be said about the rise of ordinals and making parallels of, NFTs in the Ethereum days 5 years ago, I think it's very similar, right? In terms of the NFT volume of monthly sales, which is about $1.5 billion a month at the moment, which isn't too shabby. There are days where Bitcoin actually is the larger pie of it, and typically hovers around 20 or 30% of that volume, which I think is really healthy for really what could be said is a still very young sort of ecosystem in comparison. So yes, we're bullish, and with projects like from the DIY studio, like with Life Beyond and basically the Sparks community, I think they're building basically a metaverse on Web3. On Bitcoin.
I've heard it speculated before that every game in the future will have their own L2, every popular game, to deal with just the amount of transactions. But like, let's say, I want to get your opinion, but let's say by 2030 or 2040, so decades from now, do you think for the L1s, gaming will consolidate to one or two or three, or do you think it'll be many?
So first of all, I think it'll be many, but I don't think it'll be many simply because of the fact that it'll solve necessarily scaling solutions. I think it'll. I think it has more to do with the cultural community context of those communities, because gamings themselves, when you think about the sort of even the medium-sized games in Web two, actually have millions and millions of daily active users, right? Or at least monthly active users. And so, in a sense, they're already communities of their own. And if you look at some of the older sort of, I guess, true sort of Web two games or Web two metaverses that are actually sort of kind of economic systems and have been running for decades, like Second Life or EVE Online, they're still around. They're still doing pretty well without blockchain. Well, but the user numbers are much lower. So I think Second Life has maybe less than 1 million users, right? For instance, but they've been around, I know what, 20 odd years, for instance, and continuing to sort of grow in the space. So if you can do this with that kind of traffic, imagine what would happen when you have so many games that are actually truly economic systems with an actual sort of world economy because of the power of blockchain. I think we're not going to have a situation where it's one or two or three. I think it's going to be thousands of them that basically do that. And again, because of Web3, they'll have sort of these capital opportunities. And the token infrastructure, I view them kind of almost a little bit like the quasi-national currencies of those particular metaverses, which of course can be interchanged, whether it's through the CEX or through DEX, it doesn't really matter. So the liquidity is still portable. But to manage the specifics of the economy, whether it's inflation-based, whether it's fixed supply, whether it's earned, whether it's sold, like whatever the models are going to be reflected in those token sort of designs, which aren't universal necessarily, which is why I think it's not that straightforward to basically assume that there's going to be just 3 or 4. In fact, that to me is like saying the world will only have 3 or 4 cities. No, I don't think so, right? I think the world has hundreds of thousands and millions of cities for that very reason. And I think the open metaverse in Web3 will be function exactly the same way. So we'll have many token ecosystems and potentially many sort of L1, L2, so forks, spin-offs, or originals, for those reasons.
This is a question about advice you give to investors, people in gaming. Like for me personally, I'm a producer and a judge of a show called Killer Whales. It's like a Shark Tank of Web3. It's on Apple. It's on.
I've seen it.
Okay,
I've seen it. Yes.
I think one of your projects, Phantom Galaxies, if that's
that's right.
They were one of the winners of our gaming episode. Anyway, we're doing a season 2. But on that show, apart from evaluating these projects in real time, some of the judges give advice or just give their input. There's like a VC chair, an influencer chair. There's 5 chairs total on every episode. If when projects come to you, what advice do you give them from for a project side, but I also want to know when investors come to you, what advice do you give them?
So 2 different ones, right?
Yeah.
So the first one, from a project standpoint, typically we love to see projects that build with this premise of impact and purpose, or more specifically, to build impact with purpose is actually what we look for. So in other words, we want projects to find something that ultimately feels greater than, is greater than themselves. Because that's the only way really in which you're willing to go through all the sacrifices and hard work. Like for instance, how do you survive a bear market? Which, last year was pretty much a bear market. And how do you do that when maybe your prime motivation is money? Well, if your prime motivation is money, then frankly speaking, you will give up fairly easily because there's other ways to make money more efficiently and more faster, for instance. And that's tough, for us to back because then really it's just kind of where the wind goes. And we see this, by the way, with VCs as well. It's like, oh, okay, Web3 blockchain not looking so hot, so let's go AI, for instance. Oh, blockchain is hot again, let's go back in. And while, people do that and that's okay, I think that's really difficult for a founder to sort of switch in this manner, right? But anyway, so I think we seek for conviction. So you have to have conviction. If you don't have conviction, then I think it's really hard, right? I think as a founder, you need to be willing to sort of, be able to sort of sacrifice a fair amount of time and a fair amount of, whether it's family time, whether it's, basically wealth opportunities and so on in order to make it happen. So I'll give you an example, for instance, in gaming, where I see this. Is that yes, you can make a game and maybe your mission is just to make it fun. That's one thing. But the higher purpose really in Web3 gaming is you can actually teach financial literacy. You're onboarding people in like the Philippines, like what SkyMavis and Pixels is now doing as well, who don't have a university education and who don't, maybe even have a high school education, but they've learned something about financial literacy. They end up joining the capital class, and as a result, onboarded, millions of people from Web 2 to Web 3, these kind of, I guess, what you would call sort of, less developed nations, right? And basically provided an infrastructure through gaming that, wouldn't have been possible before, right? And so that's a higher purpose, right? And so gaming is fun, but then when you know the impact you're building, it gives you a different kind of drive as opposed to, well, we just want to make money, for instance, right? So I would sort of seek founders to try to sort of find those various purposes, which can be very general, but something that, makes you get out of bed super excited. For the investors, I would say, I view the space as a little bit like early internet. And maybe we're kind of in the 2000, 2001 stage of sort of Web 1, but in the Web 3 equivalent. So how do you really sort of invest in that cycle? And again, we believe in the shared network that I shared before. But if that's the case, we think you need to invest in many projects. I don't think you can just back one. I think this idea of backing the one winner is kind of a classic zero-sum thinking approach, right? And so instead, you back the ecosystem. And even if some of them fail, which many of them probably will, you've actually just given money to the ecosystem as a kind of tax. You've helped them, because even if they fail, those people learn something and they might work for another startup that will be more successful. And here's the thing about Web3. If a project, even that you didn't invest in, does really, really well, the fact that it has a halo effect to the rest of the industry basically can help lift the rest of the ecosystem, kind of like a, rising tide lifts all boats type of approach. We see this very often in Web3. When Pixels and you see those tokens, that when Pixels basically took off and then Axie basically followed, gaming tokens started to become a really hot topic again. Liquidity was flowing all over the place. Consequently, you had many, many gaming projects do really well as a result of that halo effect, but also because of the shared liquidity that happens in these network effects. So the most optimal way to participate is not to back one project, but is to back 20 or 30 or 40 of these projects, because you can't necessarily predict which game will do well in the early stages. But essentially, it's like, I don't know if you remember how mobile gaming back in 2010 and 2011, particularly when it first started, every game was a hit. Every game had good downloads because we were at that early stage of development. I think Web3 gaming is kind of the same. So I would encourage investors to be much more broad in this stage of development, as opposed to much more sort of specific. And Animoca with over 450 investments, I think some investors have sort of bought our shares, particularly on secondaries, with that thesis in mind, right? They're saying, you know what, I don't have time to invest in 20, 30 different companies or hundreds of companies, but by owning shares in Animoca brands, that's one way to do it, right? And so there's ways to do that in other ways as well for those who have an interest in doing it. It's like almost like an index.
Yeah, you have such great perspective on crypto and the gaming, crypto in general, but specifically gaming. I want to encourage the audience to follow you, follow Animoca. The links are down below. In our final 10, 12 minutes, I want to zoom out a little bit. This first question, Bitcoin halving. What are your expectations as a guy that's been here before?
So first of all, there's a lot of historical theories and ideas about Bitcoin halving, but my view on Bitcoin halving is a little bit like sort of crypto Christmas. What I mean by that isn't necessarily the gift that it gives, because that's, I think, sort of pretty relative and perhaps even subjective. But it's the fact that it's a tradition that everyone talks about. When halving is on, the whole world talks about it, right? It's like Christmas. And to me, it's the reason why, especially in the past, we kept having the narrative keep coming about Bitcoin halving, right? It's almost like, don't forget us, there's Bitcoin halving, right, coming, and it's going to change something, right? And whether it has an impact on the price, to me, is almost secondary, because it's basically tradition now, right? And I think also, to me, actually, and this is sort of a side note, I think the sustainability of sort of the mining framework of Bitcoin, it can't be sustained purely by assuming that Bitcoin is going to be worth $1 million in the future, but an increase, of course. But rather, I think it comes from all these new applications, like, for instance, ordinals and inscriptions, because they provide, additional revenue sources and and more diversified revenue streams for the miners to continue to defend the network. So to me, I think those innovations will happen and grow, and won't just be based on the price appreciation. But yes, my perspective on halving really is it's a great thing to talk about. It keeps the story relevant. It's like Christmas.
Are you in the Michael Saylor camp in the sense that Bitcoin is going to 1 million? It's fundamentally separated itself from the store of value pack eventually.
So, I mean, because of its mechanism, I would say that it is. I think it is entirely possible that it will do that over time. And the reason why is that I think of, in the future, I don't think of it purely just as the differentiated store of value. I see it as a status symbol, right? So in other words, in the same way that NFTs have a certain kind of status symbol, because Bitcoin has basically a mathematical scarcity, it also means that owning one, basically, as a result, will have that scarcity aspect. I'm not a huge fan because I don't think it's very inclusive, and as a result, I think it's entirely possible that on market value, the sort of combined market value, the remaining Web3 ecosystems might be larger over time. At which point the ecosystem will obviously be a much larger one than it is right now. But that does not preclude that. Again, it's not zero sum, right? Just because the other ecosystems grow does not mean it's at the expense of Bitcoin. I think it's quite the opposite. Because I think if you remember, most of the crypto people today didn't join because of Bitcoin, right? The early generation was all about buying Bitcoin as essentially that store of value that hopefully appreciates. But the narrative in the last 2 or 3 years was mostly things like NFTs and gaming, and really is sort of Ethereum and Solana and other tokens. Those people actually, now that they've sort of attained a little bit of wealth or had something, they're the ones buying Bitcoin now too, right? So it's the other way, right? So the growth of all the other blockchains are actually driving people to the OG of blockchains, which is basically Bitcoin, because they want to own a piece of that, because it is essentially like having OG provenance in blockchain, and that to me is Bitcoin.
Final Bitcoin question, and this one's just for fun. This is what the Bitcoiners behind closed doors talk about at all the conferences. But top of this cycle for Bitcoin, do you see it surpassing 120K?
Yes, I do see. I do think it's entirely possible. Obviously, it's a rocky road. And the reason why I think it's possible is that we're not done yet with spot ETFs. Spot ETFs are going to come in Hong Kong, probably in the UK, maybe in Japan, maybe in Singapore, right? Like, why should the US have all the fun, right? And I think, despite all of the, let's call it, struggles the US has had, basically it's demonstrated its success. And so, every other place is going to want to do that. And of course, we should also expect other type of ETFs to come out, not just Bitcoin, but it'll be the first one because it's the easiest one. And so I think more liquidity will ultimately rush into the space as a result of more spot ETFs launching in due course, probably many of them, in the course of the next 12 months or so.
2 final questions. I know you're a busy man, you have things to do. I would love if this doesn't have to be about crypto at all, just about life advice and success, but finish the sentence if you would. I became wealthy when I understood blank.
Purpose. I mean, you want to elaborate? Sorry.
I mean, just a sentence or two, even though we just kind of went over it. But yeah, that's great.
Yes. So to me, it's sort of the meaning of purpose is basically sort of intrinsically the deeper reason why we do things. And so, and when we talk about wealth, I don't specifically only talk about material wealth, right? The sort of, wealth is a form of, I guess, a source of happiness of a different type, right? Meaning that you could be, wealthy with, let's say, love, or wealthy with, reputation, or, these are other forms, right? I think of wealth as a kind of social currency, which, by the way, since we're talking tokens, can be represented in many other ways, right? But that aside, we as humans, we're social. Everything about us is social. I mean, when you think of the opposite of social, if you've done something bad, you go to prison. The sentence is going to be isolated from society, right? I mean, that says something, I think, about the power of social. So everything is related to social currency. Even when you buy a luxury good, whether it's a Rolex or a Ferrari or a Birkin bag, or when you buy an NFT like a Bored Ape or a Mochaverse or Sandbox Land, for instance. And what is it that you're seeking for? It's not necessarily specifically just the money value. It's a social currency implied, the reputation around that. And for some people, the amount of money that you have, which is where they sometimes conflate that with the pure wealth aspect, is that the amount of money you have actually is supposed to present a certain type of status, again, related to social. But then once you reach a certain amount of money, actually it's no longer enough to have just more money. You want to demonstrate it or show it to amplify your social currency, essentially amplify your own network effects, which consequently comes in the form of, I don't know, art, house you live in, car you drive, whatever you want to say, right? So yeah, so it's a big question. It's probably a multifaceted question, but I think when you find your purpose, then I think you'll find all your sources of wealth.
If you were starting over today at 22 years old and you had an extra $1,000 in your pocket, what are practical steps or practical things you would do to go from 1,000 to eventually 100,000?
Well, okay. So, I mean, I guess there's two ways to approach this. The way that I did it, I'll just give you what I did in similar circumstances. I obviously built my own business, and actually, when I was actually 22, I built a business called Outplays, which is basically one of the earliest. I guess back then it was called ASP, but really it was a cloud computing business. This is 1998, so we're talking about a long time ago. But anyway, but also I ended up becoming a very prolific angel investor, and I didn't put that much money, but I basically put money in all these companies that I thought had potential. But the only reason I could do that is because I was building a business in the early Web1 space too. In other words, you can't actually really invest in sort of projects well in that era of new technology if you're not in it, right? If you're sort of from the outside in and just investing, it's a little bit taking a shot in the dark because you don't maybe know enough about what's cool or what's hip or whatever or what's important. But if you're building, that you've got insider knowledge of the inner workings. We see this, by the way, today in Web3, right? If you are a smart contract developer, if you understand how token ecosystems work, if you're actually in the system and you're happily farming or playing Web3 games, you're naturally going to be better at investing in these type of projects, right? So, in other words, what I'm saying is that you basically go build a business, could be small, in the space, and you invest in the businesses and the companies that you understand from building in the space, right? As in, you learn from it because now you have an appreciation. And I think that's how we played the early cycles. And in a way, Animoca Brands is just a bigger version of that philosophy. We're building, right, and have projects like Sandbox, but we're also, probably one of the most prolific Web3 investors in the world.
Nice. And I guess, yeah, final question. Will you be at Token 2049?
I will absolutely be at Token 2049, yes.
My brother and I will be there too. Hopefully we see you there. We were in Singapore last year and that was an excellent conference. So I'm looking forward to this one. But just final thoughts for the Altcoin Daily Army. I really appreciate you taking the time with us today.
So thank you. Thank you for sort of having me. If I can share one other thing, for your audience here is that, building in Web3 actually serves broadly, even if you're not aware of it, higher purpose, right? And I think the higher purpose is that you're basically helping shape a new kind of capitalism, creating more financial inclusivity through financial literacy, and basically making most of the world capital owners, which are not today, right? Most of the world are still in the labor economy. They don't own anything. But we're supposed to be building a capitalist society. But really, it's only benefited, the 1% out because they're the only ones who get to own that capital. But in Web3, right? Even if you just own a few tokens in your favorite blockchain, you basically become a stakeholder, which means you're a capital owner. So to me, this is a movement about making everyone a stakeholder in this future, I guess, asset class, and in this sort of future system, which I think is basically the future of the internet. And so whatever you're doing, whatever you're building, however you're trading, you're all contributing to basically helping build that future. So I do want to take this opportunity to thank your audience for their contribution and continued contributions in that space.